Hey guys, welcome to the first episode of Tax Talk with Joel, and on today's episode we'll be going over whether or not you should form an LLC. This is probably the most commonly asked question that I get from new business owners, and by the end of this video you'll know exactly whether or not this is the right move for you. We'll be going over the misconceptions of LLCs, the advantages and disadvantages of having an LLC, the compliance requirements for having an LLC, and why I think an LLC is the best entity to have. Alright guys, so what are the misconceptions of having an LLC? For starters, a lot of people tend to think that LLCs are formed for tax purposes, when really, LLCs are formed for legal purposes. The main purpose of forming an LLC is to shield your personal assets from your company's liabilities, hence the name, Limited Liability Company. A lot of new business owners don't consider the possibility that their business can be sued. They're preoccupied with making money, but it can happen, and having an LLC will protect your personal assets. So that's the purpose of forming an LLC, but could an LLC also help you reduce your tax liability? Well, not in the way that some people think. New business owners seem to think that by simply forming an LLC, they're gonna get all these extra tax write-offs. Well, I hate to break it to you, but you actually get the same write-offs as a sole proprietor. A write-off could be anything that is ordinary and necessary for your business. Some common examples of business deductions would be your cell phone, your internet, your automobile expenses, your travel, and your dues and subscriptions. The moment that you're a business owner, these expenses are typically tax deductible. But forming an LLC isn't going to get you extra tax write-offs. However, there are other ways that an LLC can benefit your business from a tax perspective. One advantage is that LLCs are able to retroactively change their tax classification. What does this mean? Well, as I mentioned earlier, an LLC is not an entity for tax purposes. So by default, an LLC is taxed as a sole proprietorship. And sole proprietorships pay the most money in taxes. This is because they pay an additional 15.3% in self-employment tax. That being said, I still recommend that you have your LLC taxed as a sole proprietorship when you're just starting out, because it'll make your taxes simple and straightforward. Sole proprietorships have the least amount of compliance requirements compared to, say, an S corporation or a C corporation, which are required to have financial statements. S and C corporations also require you to pay yourself a reasonable salary through payroll and to file a separate federal tax return. Well, this is not required when you're a sole proprietorship or when your LLC is taxed as a sole proprietorship. So paying that extra 15.3 in taxes will actually be cheaper than paying to maintain an S or C corporation. However, if your business continues to grow, well, now that extra 15.3% in taxes isn't as cheap. That's when the ability to retroactively change your LLC comes into play. Picture this. Let's say you formed an LLC in 2022. And you had a great year. Let's say you made $250,000 in gross revenue. That's typically when it's worth it to change your tax classification. Well, if it's 2023, with an LLC, we're able to go back and retroactively change your tax classification so that you are now operating as an S or C corporation, whichever is best to help you keep as much of that $250,000 as possible. Why would we need to do that? Well, basically, after a certain point, the reduction of the self-employment tax of 15.3% will be greater than the cost of an accountant like myself to help you with the compliance requirements of having an S or a C corporation. But it's important that you're doing business as an LLC, because without it, we wouldn't be able to retroactively save you any money in taxes. For example, when I'm preparing a tax return and a client asks what I can do to help them reduce their tax liability, unless I've been tax planning with them throughout the entire year, typically the answer is there's not a whole lot that we can do because the year is already over. However, when you have an LLC already formed, well, now we can retroactively change your LLC into an S Corp or a C Corp to get rid of the self-employment tax. And typically, we can retroactively make this change since the date you formed your LLC or the last 3 years and 75 days, whichever is later. So what are the disadvantages of having an LLC? Well, there aren't many disadvantages. The only disadvantage that I can really think of is that there are additional fees to form and to maintain an LLC. For example, if you want to hire an attorney or a CPA to form an LLC for you, the costs vary, but you're looking at a one-time fee of about $2,000 to $3,000. Also, some states require you to pay a state franchise tax, to file biannual reports, and to file a separate state tax return. In California, for instance, you're required to pay an LLC fee of $800 every year. You would also be required to file a statement of information every 2 years, and you would also be required to file an LLC separate tax return, or Form 568. The additional fees to help you file the biannual reports, like the statement of information and the state tax return, vary from one CPA firm to another. But at our firm, you're looking at about an additional $700 a year. So even when your LLC is taxed as a sole proprietorship, you can expect to pay anywhere from $700 to $1,500 a year, depending on whether your state has a state franchise tax in order to maintain your LLC in good standing. But besides that, these fees are really the only disadvantage when you form an LLC. The entity you choose will play a major role in how much your business pays in taxes, and a lot of business owners are overpaying in taxes because they haven't done an entity analysis, which means they're doing business under the wrong entity. However, if you have an LLC, your business will now have the flexibility to be taxed in any way. It can be taxed as a sole proprietorship, it can be taxed as an S corporation, and it can be taxed as a C corporation. This is why I think LLCs are the best entity, and why I typically recommend business owners to start their business as an LLC. So my advice is, if you can afford to form and maintain your LLC, then absolutely do business under an LLC. Once you're making more than $250,000 in revenue, reach out to a CPA like myself to help you retroactively make those tax changes. So that's it for this video, guys. Hopefully you now have a clear understanding of whether or not you should form your LLC. If you need help forming an LLC, or perhaps you want a free tax assessment, you can go to sandovaltax.com/YouTube and schedule yourself in for a free 15-minute discovery call to find out how we can be of service. You can find the link in the description down below. Again, if you found this video useful, please like and subscribe. And if you want to be notified of when I upload new videos, go ahead and hit the bell as well. That's all for today, guys. There's more episodes of Tax Talk with Joel coming soon. But for now, have a great and amazing day.